Hey everybody, this is Jose Blasco. We are about to start the session in like 20 seconds or so. This is a sound check. Please go ahead and type a quick message on the chat box so I know you hear me well and everything is good to get started, guys. Normally that would be the case, but again, nothing wrong with a quick confirmation, a quick hello we do on the chat box. Very appreciated, guys. Here we go. So we are live. Very nice. Thank you. Thank you very much, guys. So let's get started. Welcome to the session today. Get together trading session for short-term trading. Today is August 11, 2020. We are ready to do some intraday trading, isn't it? By the way, I forgot to turn on the video stream, so let me do that. Here we go. How are you, everybody? Good to see you. So so as I was saying, time to get started. We have some intraday trading to be done. We're gonna spend, let's call it 45 minutes or so, looking for trading opportunities. And as long as they meet our criteria, they meet our rules, we will be delighted to execute such trades. If they don't meet our rules, they don't meet our criteria, so then we'll move on into other opportunities very mechanically, no thinking, just following a process and managing our risk, managing emotions, managing the process, and so on. Okay, this is how trading should be done. How are you, Boyan? Good to see you. Sandeep as well. How are you? Furmon, good to see you. Good to see you all, guys. So before we start, quick one. I'm just gonna give you the opportunity to read the disclaimer. Disclaimer is obviously important, so please go ahead and read the disclaimer, guys. It says that this video is for educational purposes only. Obviously, we're gonna be planning on trades, isn't it? Executing those trades or not executing those trades in the end is your decision, using real capital, paper money, larger size, smaller size. All of those, of course, are your decisions. While we will be following a process properly, of course, this is an educational session, so keep that in mind. Okay, so the session is now officially introduced. Here is our trade station, and we are ready to begin, isn't it? So what do we have here? We have the red screen. Okay, so we have our red screen. On the left, I got the futures markets. Okay, so if I move to the middle part or the right side, you can see here Forex and Forex. So in other words, we're going to be dealing with Forex and futures. Notice that in the center part of the screen, what I have is the majors. Okay, 60 minute, 240 minutes, and daily climates for the majors. Where on the right side, I got 4-hour time frame climates as well, but notice how all of those are minors or cross pairs. And also we have daily climates below. Okay, so currencies, spot Forex in the middle part and the right side, majors in the middle, minors on the right. And if we point at the very, very left, this is where we normally start, isn't it? So those are futures markets, and we are looking at much lower time frames such as 15, 60, and 240. Of course, the markets on the top are normally our preference because they are, or they normally are, the most liquid markets out there. And as we get started, we have an opportunity to take a look at both the Euro contract as well as the Dow Jones futures. So let's go ahead and do that. Let's open Euro contract, Dow Jones futures. Let's open those workspaces and begin the planning. Okay. Here we go. Here we go. So start with the euro. So when it comes to the euro, let me see. So what do we have? Let me zoom in. So we have a climate. Climate is confirmed. Red color means is a down climate. We've been in this climate for 4 candles. Statistics suggest it's going to be 6. Okay. We are dealing with climates of 15 minutes. So if we were to catch a trade, we could be in this trade for another 30 minutes or so, maybe more, okay? But 30 minutes is a reasonable expectation, okay? Now, what's the problem? The problem with the euro is that the ideal trading price is 82, okay, 82.6, and 82.6 is somewhere here, and there is no red UFO at this price point in any of the edge time frames. Okay, so it doesn't mean we will not be able to take a trade in just a little bit. Maybe in just a little bit of time, we do have a red UFO around this price point, but at the moment we don't. So what I'm going to do is I'm just going to move into the Dow Jones futures right here. YM is the Dow Jones, okay, YMU20, and do the same analysis, see if we can plan on a trade. And let me tell you that we don't have a trade at the moment, but let me explain why. So when you see this yourself, you know why. So first, auto climate, it's telling us thick and blue. Okay, so thick and blue means it's an up climate and it's confirmed. So time to go long, time to be a buyer of the Dow. Okay, we are looking at 28,008. That's our reference buying price. We have 3 candles into what statistics suggest could be 7 candles on the way up. So certainly valid entry. Okay, and if I was to point at 20,008, so this certainly falls inside that UFO. So you may say we have a trade. Okay, what's the problem? Okay, we don't have a trade, and why? What's the problem? Well, the problem is that this UFO is overlapping with this UFO. Therefore, if I was to take the trade, my entry would be using the upper UFO, my stop would be below the bottom UFO. And because they are overlapping, and on top of that, especially the one below is quite large as a UFO, it's not a small one, it's a large one. It's not like the one on the right here, which is a small one, isn't it? We like those tiny ones. So what's the problem? The problem is that if this is your entry and this is your stop, the distance in between, it's the one you should project to the upside to set your safety target. And in other words, your safety target is going to be very far because your stop is very far, and therefore it's not a safety measure anymore. It's just a target. It doesn't act for safety, right? It's just a target. So in that sense, we will pass because of risk management measures, which in this case this trade setup is not convenient to us, and we'll look into other ones. Okay. So the euro hitting that red UFO there, but again, that red UFO is higher. That one is 85. Okay, that one is 85. The reference value is 83. So as I said, with the euro as of now, we don't have a valid setup. We need to wait for the setup to form. So back to the red screen, okay? And a question from Sandeep as well. Ahmed, how are you? Good to see you as well. So Sandeep says, hi, when we look at the 15-minute time frame, moving average price, that means these are hourly, daily trade rights. Hourly, daily trade right. Not sure. I get what you're trying to say. At the same time, I'm always a bit prudent when it comes to certain terminology, because you may say hourly, daily trade, and that to you means something and to me means something different. And I say yes or no, and then we have a confusion. So this is intraday trading. Okay, this is intraday trading. Maybe I will move away from daily or hourly, and I will say intraday trading. So we plan to be in the trade maximum for 1 day, in and out during the day. And given the fact that the climate, in this case, for example, is based on 15 minutes, and statistics are telling you this climate has been running for 3, statistics suggest it could be up to 7. So from 3 to 7, you have 4 candles, 15 minutes each. A regular expectation would be to be in the trade for an hour. Okay, that's what you would expect. And then if you call that an hourly trade, so I'm totally fine with that. But I want you to understand how I'm thinking, just to make sure I give you the right answer, which is really I'm not thinking about any particular time exposure. I'm thinking about being in and out during the day. Okay, and then I will adapt to what the market has to give me. If I was to enter this same trade on the Dow Jones when I get into candle number 1, so now I'm going to be in a trade for 7 full candles, 15 minutes each. That's going to be almost 2 hours. So it's the same setup, is the same intention, but trade number 1 would be 1 hour long, or should be 1 hour long. Trade number 2 should be up to 2 hours. Okay, so again, I just want to make sure we don't get confused with the concept you are using when it comes to hourly and daily. Okay, so hopefully this makes sense, Sandeep. Miguel, how are you, Miguel? Good to see you. Good to see you. I owe you some email, isn't it? Yeah, well, I told you the other day, it's been very, very busy in recent times, but I'll catch up with you, okay? Good to see you, and very glad that you're joining us today. Russell Futures, okay? RTY is giving us an alert, okay? So the Dow Jones was not giving us a proper setup. Maybe the Russell does. So if the Russell does, we'll go for it. Okay, careful when taking trades in an intraday basis point of view, because many of those trades, even if you are dealing with markets that are not correlated, many of those trades may happen at the same time. So you need to manage your correlation risk. But in the case of the Russell and the Dow Jones, on top of that, those are related markets, very, very related markets. So you have to be really careful here. Okay. Anyway, so with the Russell, what do we have? Well, with the Russell, we have a trade setup where the climate is confirmed. We started this climate, okay? We are candle number one. Statistics suggest it could be up to 7. So we may be in a trade for almost 2 hour long, 1 hour 45 or something like that. This is what we have with the Russell. Our reference point would be 1598.93. Okay, so let's call it 1599, something like that. And 1599 is right there. Okay, as of now, there is no green UFO. Just like here, no green UFO. It's a blue climate, so we want to buy one green UFOs. And unfortunately, we don't have any green UFO in the right location. Okay, so we're gonna have to pass. Yeah, yeah. So nothing new in any of those markets. So back to the red screen. So again, Russell and the Dow Jones are giving us a near sensible opportunity, but when looking at the chart, the UFOs are not in the right place. So no trade for now. We just need to be patient and wait for the right setup. So what we're gonna do while we wait is to move into the Forex world. And we can see here that both the Aussie dollar as well as the pound against the US dollar, okay, we are talking about the majors, are giving us trade setups that are valid. Here below, we also have setups, but careful, non-confirmed climate gray box. And here below as well, we have valid setups, but again, same story in the daily time frame for these currencies. We got gray box, not confirmed climate. While here on the top, the climate is confirmed. So when it comes to the majors, it seems that today we have an opportunity to plan 2 trades as of now, which is the Aussie and the pound. So let's go ahead and let's bring trading view so we can begin with the planning of those trades, okay? So let's begin with the Aussie US dollar. Okay, Aussie US dollar. And again, we are dealing with a 1 hour time frame, so please ignore the charts on the right. Okay, we're gonna focus on the 2 charts I got on the left. The one with the gray background, it's for climate purposes. The one with the white background is where I'm gonna have my UFOs in a second, okay? So what do we have? Okay, so let's make this a bit bigger so you guys see better. Okay, so what do we have here? So we have, as red screen suggested, a confirmed climate, okay, confirmed climate, thick dot, okay, 2 candles out of 5, certainly out of 6 in this case because we round up. So we are certainly in the right place for us to begin planning on this trade, okay? Now, for us to plan on this trade, we need to keep in mind our reference point, which is the black line, okay? So this black value is not the current value of the Aussie. This black value is the value for the EMA. That's why it's black color like the EMA. The price is gray color, okay? Which I have it disabled here to not to confuse us, okay? So 71.71, it's the reference value. The current price is 71.68, okay? So I just need price to go just a bit higher and I'll be able to get into a trade as long as I have a UFO. So turning on AutoUFOs to see where my UFOs are, okay? And it's not looking good because my next UFOs are so far up, okay? So far up. So unless new UFOs form, which could happen, okay? So this is something for you to watch. Unless some UFOs form, we don't have a trade here, okay? But before we give up 100% on the trade, we're gonna look as well at the eight range time frames. Apart from 8 minutes, we can also look at 8 ranges, okay? So let's go for 8 ranges, and maybe we'll have UFOs at this price point, and it seems that we don't either. The nearest UFOs are located at 71.75, which realistically, it's quite close to where the EMA is, okay? And this may bring the price down. The EMA is 71.71, but remember the price of the currency was 71.68, which is only 3 pips lower. So when the currency goes up, the EMA will go up, but certainly the EMA will not be enveloped by those UFOs when we get to the entry price, okay? So we don't have a trade with the Aussie. Almost, but we don't. So we're gonna move to the GBP US dollar. That was the other currency where we may have an opportunity. Actually, we do. Okay, right now. Okay, right now we do. Let me explain this properly. So notice. Okay, notice climate is confirmed. Okay, 1 out of 6. Okay, so we may be in a 6-hour trade here. Or maybe more, maybe less, but statistics suggest 6 hours would be a normal thing to happen. So we welcome that. Selling is the right action, right? So thick and red, and our reference value is 97. Okay, 130.97. And what happens? Well, we are entering UFOs. Okay, as the price is 98. Okay, so in other words, that red line is below, is 97. Okay, and we have those overlapping UFOs all the way to 131.195. Okay, so my friends, we have a trade to be executed right now on the pound. So connecting with my paper money account here, so I can do the simulation here on the right. Okay, and entry. So we're gonna make it 97. Okay, even though right now we have the opportunity to enter at a little bit of a better price, 98 something. So that's great. But 97 is the theoretical price at which we want to get in. The target. Okay, so let me turn on AutoUFOs on the chart with a dark background, the gray background, I should say. So the target would be 130.45. Okay, so 130.45. This would be the target. Okay, so we're talking about 52 pips below. It's not that far, but let's see where is the stop, and then we'll evaluate if the trade is worth it or not. So 131.195, that would be the location for the stop. So 131.195, that would be the location for the stop. What do we do in these cases? Of course, 19.5 becomes 20, isn't it? But then it's a buy stop, so it needs to be 22, and then it's a stop, so we need to add 5, so it's going to be 27. Okay, it's going to be 27. In other words, we are risking 30 pips in order to make 52. This trade is a 1.73 to 1. It is not the best trade that you will take as a trader in the world, but it does meet the rules, okay? And therefore, it's a trade to be executed as long as you are happy with such reward to risk ratio, which is, again, not the best, but it's valid based on the rules, okay? So the risk is 30 pips, okay? So if I take 130.97 and I remove 30 pips, okay? So we're gonna have a safety target located at 67, where the final target is 45. 130.67, 130.45. Okay, so let me write down the whole trade plan on the screen, so that way you guys can have an easier time executing this, going from top to bottom. So stop loss will be 131.27. The short entry would be 130.97 or above. Safety target, same distance below. It's 1.3067, as we said. And finally, the final target, which is much lower, not so much lower really, but a bit lower. So it's 130.45. Okay, so this will be the plan. I'm going to leave it on the screen for a second so you guys can go ahead and take a note. This trade is valid, and really the order is to be placed now, because we are dealing with a situation where the current value for the pound is basically a couple of pips below the entry, so you can get filled anytime. And while I leave this on the screen, I would like to read some deep questions. So, hi Jose, even though AutoClimate says red, but it's only one dot, and if you see on the left, AutoClimate turned blue after 1 or 2 red dots, in this case, should we wait for 2 or 3 red dots to confirm? Well, again, it's all about terminology. Okay, when you say confirm, I get what you mean, but actually a thick dot means confirm. Okay, the thin dot means unconfirmed climate, the thick dot means confirm. So 1 dot is enough. If you wanted to add a rule or have a different way to use AutoClimate, which is, I'm going to wait for 2 thick dots before I take the trade, well, I would say could be, but that would probably at times hurt the profit of some of the trades that you would take, as well as maybe you miss a few moves. In the other hand, if you get a little bit of choppiness, so yeah, it is possible that sometimes you get stop outs, and then waiting for 2 dots sometimes may be helpful. But again, notice that in order to alleviate this problem, we use a safety target. Okay, so for example, in cases like this, where maybe you see a couple of dots and then it changes, okay, or here 1 dot and then it changes, okay, so or here, okay, so anything could happen anytime, right? So that's why we have stops, and that's why we have safety targets, because if a change of climate takes place, okay, based on statistics, once a climate is established and confirmed, Statistics suggest it's going to be 5. Okay, but it doesn't mean it's going to be like that. Okay, that's statistics. Okay, so this is what tends to happen, but it could be 1, it could be 2, it could be 20. Okay, 20 is rare, 1 or 2 is rare, but it could be. So what do we do? Well, that thick dot means that the market was moving in that direction for a whole 1 hour. Okay, for a whole 1 hour, and 1 whole hour moving in that direction hopefully gets you to safety target. So then if you have a change of climate and you get stopped out, you end up breaking even, which is part of trading. Okay, so again, my view on trading, again, I'm not a conservative trader. Okay, so again, this may resonate better or less well with some of you. My approach to trading is not about looking for confirmation the way you phrased it, Sandeep. Certainly I wait for AutoClimate to give me a confirmed climate before I trade. So that I do, but I'm not gonna wait for confirmation on top of confirmation, because that would make me a bit too conservative, and it's not my style. I am more in the aggressive side, which I'm not saying that being conservative is wrong. It's absolutely fine as long as you know that's you. My fear, which I may be totally wrong with that one, Sandeep, you may want to comment on what I'm about to say, or it's a bit personal, so I would understand if you don't comment as well. But my fear when I read a question like the one you have typed, which is very valid, okay, but at the same time I cannot help it in the back of my mind to think that maybe there is a little bit of I want to avoid the risk thinking behind your question. And that's very dangerous, because if you want to avoid the risk, you are looking for the perfect trades. And if you are looking for the perfect trades, you may never get the perfect trade. And then you get frustrated, and then you get emotional, and then you chase the market when it's no time to chase the market. I mean, it's never time to chase the market, really. And so again, embrace risk in the context of a plan with a set of rules that you have backtested, that you feel comfortable with, and you understand exactly where you are. Okay, so that's again, I'm maybe elaborating too much. The question was very specific, so I did answer, then I added more, just because I'm concerned and I want to make sure you guys develop the right mindset. Okay, what I'm talking about now is mindset. It's not trading methodology or techniques or technology. It's mindset. Okay, so make sure there is no fear on your actions, and if there is fear, it means that you need to practice a bit more with backtest, with paper money, with small size and real capital, until you really trust what you're doing, and you fully understand that trading is about losing money too, and it's part of the game, and you are totally fine with that. Okay, very good. Very good question, Sandeep. Okay, your question as well denotes the fact that you're putting time and effort into this, you're practicing, you're thinking about it, and when I see that, I love it, because this is how you guys become good traders. Okay, so very good question. Russell, let's take a look at the Russell. So what do we have with the Russell? No setup. Okay, no setup as of now. So the Russell, it's giving us an up climate right here. Okay, right there. It's time to buy, but no green UFOs around 1599. Okay, no green UFOs. So it's time to wait on the Russell. Let me see anything else. Not on the future side. So I am about to get back into Forex. Before I do it though, I believe we have a question from Miguel. So let's take a look at Miguel Mateo. Jose, if we check this trade with the GBP 30 minutes ago, we should have been filled by now. In this case, do you still place a limit order, or waiting for price to come back, or execute a market order? Yeah, so the question is, this will happen as well. Very good question, Miguel. So look, let me turn on to UFOs, okay? And the question is, do you still have the UFO on the screen or not? If you still have the UFO on the screen, even though you could have been filled on this trade, 30 minutes ago or 1 hour ago or whenever, so, certainly you may feel like, oh, I missed the trade. But again, the question is, do you still have the UFO? Why is that important? Well, because if the UFO is still on the screen, it means that the app is assuming, given the analysis that the app is performing for us and all the algo and everything that is done in the background. So the app understands that there are still unfilled orders left at this price point. Okay, and therefore taking the trade is still valid. while price may not come back and may keep falling because of the climate, and therefore you miss the trade, you should have taken it 30 minutes ago. Well, sometimes before peaking direction, the market will go back and forth, back and forth, back and forth, and then finally fall. Okay, why? Because for the markets to fall, you need to remove all the buyers, and if you still have some buyers, as price falls, the buyers kick in, price goes back up. Then price falls, few more buyers are left, buyers kick in, price goes back up. Price falls again, a few more buyers are left, buyers kick in, price goes back up, and then falls again. And then if no buyers are left, now price keeps falling, right? So sometimes there will be few buyers only, and then it's like now, so it touches the UFO and just keeps falling immediately. Sometimes it will be more like back and forth, back and forth, back and forth, until finally the market begins falling. So depending on what's going to happen, which we don't know, you may have price come back and you still get a fill, or you may have just missed it. You should have sat in front of your computer 30 minutes earlier, which of course we never know, right? We don't have a crystal ball. But again, in case price come back, my point is it would be correct for you to place an order based on the method. Since the UFOs are still on the screen, again, you still have unfilled orders left at this price point, and therefore taking the trade does make sense. Sometimes it happened to me in the sessions, okay? The complete opposite happened to me in the sessions at times, which is I am planning on a trade. You guys know me, isn't it? You spend time with me, so sometimes I do talk, and I do talk fast, isn't it? Of course, I want to explain many things for you guys. And so what happens that sometimes, because there is a conversation going on, I am explaining things, I am typing things, I want to document things on the screen so you guys understand. Sometimes I miss a trade, and I miss a trade because while I was typing or while I was preparing the trade, the UFO that was on the screen disappeared, right? So what does that mean? Well, that means that the app that understood that a few minutes or seconds ago, the app understood there were unfilled orders available. A few minutes later, a few seconds later, the app understands no orders are left. Guess what? You may feel I'm still on time to take the trade, but the UFO is gone. So what do? You need to cancel the trade. You cannot take it, because if you were to execute the trade, you're basically relying on the climate. That's all. That's all is there to help you, because the UFOs are gone, so you don't have the direct force. Okay, the direct force that drive price. Okay, cool. Very good. Okay, so let's continue, guys. So back to here. What else do we have? So the Dow Jones is giving us a non-confirmed climate here with an alert. So it's not confirmed, so we're going to leave it alone. The Russell is still confirmed. Let's take a look at the Russell one more time. So what is happening? 1598. So we had a powerful green UFO show up here in the context of a blue climate. Unfortunately, 98.84 is the reference price, which is where the Russell is right now, and both that UFO and that UFO are lower than that. Okay, so they are not valid entries. Having said that, anytime we may have a UFO shows up here, and now it's time to trade. Okay, so especially with future markets where we are dealing with short time frames and tick time frames, really the amount of information analyzed by the app, it's superior compared to when we use time frames based on time only, such as Forex, because with Forex, we don't have share bars and tick charts. I mean, you could have them, but they mean nothing, because the Forex market is not traded in a centralized manner, is decentralized. Okay, good. Okay, so let's continue then. So back to the radar screen. Let me close a few of those windows. We don't need them. Okay. Okay, so ES also giving us an alert. Both the ES and the Dow are unconfirmed, so we're gonna leave them alone for now. Yeah, so we will leave them alone for now. On the future side, it doesn't seem that we have anything close by for now. The Russell again, yes, but we talked about it a minute ago. Okay, so let's get back into Forex. Okay, let's get back into Forex and see what we're gonna have. So I'm gonna be looking at the miners. Okay, so I'm looking at the Sing dollar and the Kiwi with the Swiss. Okay, so Kiwi Swiss and Sing dollar, they are both down climates. They are both near sensible. So let's take a look. Let's begin with the Sing dollar. We have less opportunities to trade the Sing, isn't it? So let's go ahead and trade the Sing dollar. Let's see what we have. Okay, so again, this is based on a 4-hour time frame. So I would like you to ignore the charts on the left. I would like you to ignore the charts on the right. And now the only thing we focus on are the charts on the middle, where in the bottom part I got the climate, red and thick. It's a down climate. Okay, it's a down climate. 3 out of 7. Okay, so that's a good one. And we are looking at a reference price of 37.23. Okay, 37.23. Current price of the Sing dollar, it's 21. So as long as there is a UFO, let me turn it on. AutoUFOs turn on. As long as we have a UFO, it's basically time to trade. Okay, but the UFO happens to be 29, which is just a bit too high. Okay, just a bit too high. So, plus. Notice we have UFO, overlapping UFO, overlapping UFO, overlapping UFO. Yeah, so unfortunately, it's not a valid setup. I'm not even going to look at the range timeframes, because if I have UFOs here, they're going to overlap with these, and then these overlap with all the other ones. And yeah, it's many on-field orders. That's beautiful. So that probably defines a pretty strong, let's call it a wall, a very strong wall that, when the Sing dollar hits that price level, I mean, there are so many on-field orders, should bring it down, right? So probability is very, very high, but risk management would be terrible, because your stop would be located so far away that then your safety target will be also so far away. So again, we got more currency pairs to trade. If that was the only one, so then we will take it, but it's not the case. So switching to Kiwi Swiss franc. Okay, so Kiwi Swiss, and again, we are looking at the charts in the middle. So what do we have? Yeah, so what we have is a confirmed climate. Okay, so 1 out of 6. Okay, so again, that's a trade for a full 1 day, if you wish. 6 candles, 4 hours each, is 24 hours. Reference, it's 37. 37 is more or less here. Okay, and the question is, do we have a UFO? Yes or no? So let's turn on AutoUFOs. I had it on already. Sorry for that. So no UFOs until much higher, all the way to 1695. So I'm going to give it a chance, a try here, looking at the 21 range timeframes. Okay, 21 range timeframes. Okay, and I can see there are UFOs there. Let me maximize this so we can see the price points better. And you know what? We do have UFOs. We do have UFOs. Okay, so we have UFOs starting at 39, which will work well with that EMA, because as the currency goes up, the EMA will go up. So that 37 will become 37 plus 38, 39, and so it's going to fall inside that UFO between 39 to 42. So I'll take it. And then, of course, when I add the space for the stop, which is 43 plus 2, it's going to be 45, and 5 is going to be 50. So our stop is going to be all the way there, which is on the white space without entering that UFO. Okay, so we have a little bit of a tiny UFO given the amount of room we need to give it for the safety target, given the decentralized nature of forex trading, but it's valid. Okay, so we're going to go ahead and type it in. So 39 and 50. So we have 11 pips of risk in this particular trade. It's a very small risk for a 4-hour climate trade. Okay, so that's quite nice to see. Okay, those are our entry values. And then when it comes to targets, turning on AutoUFOs on the 4-hour time frame. Let me maximize this to see where the green UFOs are. So green UFOs, where are you? So wow. You heard me say before, too good to be true, and it's kind of the case. Okay, this is a 8-to-1 trade with a target located at 44. Actually, 44 needs to be 46, isn't it? Because it's a buy order. So still 8-to-1 trade, risking 11 pips to make 93. Sounds very good on paper, but again, could you travel 96 pips in 1 day? Yes, you could. It's doable, but it's kind of like going from one extreme to the other extreme in 1 day. So probably we're gonna exit the trade somewhere in between as we do trade management. Okay, but again, it's always appreciated when we see the target is very far, because the target is set based on UFOs. So if the target is far, it means that there is no UFOs anywhere close, and if there are no UFO anywhere close, certainly there is more room for the price to keep falling. Okay, cool. Ahmed, this is a good trade because the dollar is weak. You meant the one with the Sing dollar? I guess that was your comment, isn't it? Good. So anyway, so let's go for it. Okay, so let's plan this trade. Again, I need to do one more calculation. We have 11 pips of risk, right? Our entry point is 60.39. So we want to bring the safety target 11 pips below that. Okay, and okay, yeah, I was using the wrong keyboard layout here for a second. Here we go. Now I got it. So 60.28 would be the safety target. Okay, this seems to be a pretty easy to achieve target, and assuming this trade is going to work well, so normally we should be out of risk very quickly. Okay, I personally love that, especially because now the moment I hit my safety target, now I can go ahead and take additional trades in parallel. So when you do short-term intraday trading with futures, for example, you could see yourself running multiple trades in parallel, but normally it takes a lot of multitasking. It takes to be very, very quick. It takes to have multiple computer screens around you to be able to do that, and also a larger account size. But with Forex trading, especially if you are basing your trades on 4-hour or daily timeframes, it's very, very easy to get filled in multiple trades in one day or 1 week, isn't it? So again, a prudent way to do it is to wait until you hit safety target and then add more trades, so you don't increase portfolio risk. Okay, you only add more trades only after safety target is hit, and when the safety target is so close, so the probability of hitting it, assuming price will start moving your way, obviously, it's quite high. Okay, so that's something that I do appreciate. Having said that, I'm just sharing my this thought with you guys out of what a preference of mine would be. The reality is that as a trader, of course, we have zero control over this. Sometimes the UFOs will be wide, sometimes the UFO will be small, sometimes they will overlap each other, sometimes they will not. So, this is what we got today, okay? Good. So let me write down the parameters of this trade like we did before. Okay, so going from top to bottom. So stop loss would be 0.6050. Short entry would be 0.6039. Safety target, which, as we said, is equal distance below, is 0.6028. And finally, the final target with this one is very far away in this case. Okay, 8 to 1, it's 0.5946. Okay, so this is the plan for the trade. Hopefully all is well understood. If it's not well understood, please go ahead and let me know. The UFO in the 41 range disappeared. So if that's ignore it, it was another one. Okay, got it. If that was the case, I was ready to cancel the trade. Okay, I was ready to say, okay, let's erase all of this, cancel the trade. Okay, you gotta be mechanical on your action, guys. Okay, it's very, very easy. I mean, let's face it. We love trading, isn't it? I guess if you didn't, you would not be spending some time with me here in the YouTube channel, isn't it? So we love trading, therefore we care about it. Therefore, we put time and effort, and because we put time and effort, we even care more. And next thing you know, now you find a trade and you spend, whatever, 5, 10, 20 minutes to define the whole setup, and now you have it in front of you, and now you're ready to place an order, and now the UFO disappears and you have to cancel it. So when that happens, you may find a little bit of a challenge there, and you may kind of find an excuse to be in denial mode and be like, wow, I'm going to take it anyway, because the UFO was there. It must be a glitch, right? And it's easy to fall into those traps. Okay, so please, guys, be mechanical. Okay, it will pay you in the long run. One day you may get lucky, and a trade you should not take may pay you. That could happen, and that happens to everybody sometime. But in the long run, it's all about creating a mechanical approach to trading, a mechanical set of actions to produce consistent action leading to consistent results. So be a robot, guys. Just be a robot in that sense, and you need to not to care. Okay, and I don't mean that we don't care about trading. Of course we care, and we want to care about doing a good job, and we care about money, and the reasons why you want to collect that money from the market, even more important. Okay, probably your family or things like that. But we want, when I say we want to not to care, what I mean is that we need to have a completely carefree state of mind when executing the trades. Okay, you don't want to be emotionally attached to any aspect of your trades. If the trade gives you a go ahead, take the trade. If the plan gives you a no go, pass. And you should feel happy to pass on a trade, just like you feel happy to execute a trade, because both actions are part of your plan, right? So you're not gonna accept every trade. Actually, you should discard trades more often than the trades you accept. Okay, so just keep that in mind. Okay, just a little bit of thinking. I guess I'm a little bit philosophical today by rephrasing things that we have obviously discussed in many other sessions before, but are critical. And I'm loving your questions, guys. So you guys are inspiring me to add a few additional thoughts. Very nice. Good one. So anyway, back to the red screen. Okay, so we have the trade with the Kiwi Swiss. We have the trade with the pound US dollar. The pound is coming back to entry. Okay, got it. So you guys, if you want to execute this trade and you missed it earlier, this is the time to execute it. Okay, remember to define and decide if you want to use real capital, paper money, larger or smaller size. All of those are your decisions, and make sure you have a decision about it. Okay, I'm just not saying it because it's written on the disclaimer. I'm saying it because if you were to take a trade and you were to be like, okay, so I'll use one lot today and see what happens. So that would be a gamble, okay? And I want to make sure you guys don't gamble, okay? Just follow a proper professional process when trading, calculate your size, and then go with it, okay? Good. So on the future side, we still have the Russell flashing a blue alert. So let's take a look. The Russell pointing at blue climate 99 something. So 99 something is there, but we don't have a green UFO, so no trade to be taken yet. And the other ones are hopeful, and the ones on the top got gray boxes. Climates are not confirmed. So we are back looking at the forex currencies. We looked at the Kiwi Swissy. We are done. We looked at the Sing dollar. That one is done as well. So now I'm going to move down, and it seems that we have one more to check today. Actually, two more: the Euro Pound, and the Kiwi Swiss also has an alert on the daily. But since we already checked on this one on the 4-hour time frame, so I'm going to just focus on the Euro Pound just to have a bit more diversity. Okay, so Euro Pound daily time frame. Here we go. EUR GBP. Here's where we are, okay? And again, we are dealing with a daily time frame now. Daily time frame is here. So please ignore all the charts on the left. We are now focusing on the charts on the right side only. Was the climate confirmed to the downside? So we want to be sellers of the Euro Pound. 3 candles into the climate, where stats suggest a normal thing to happen would be 5. So again, we can still take this trade and maybe be in the trade for 2-3 more days. And our reference, okay, the price we would like to execute at is 90.20, okay, 0.9020. So by keeping that price in mind, let's turn on AutoUFOs on the daily time frame and see where are the UFOs. And guess what? We have a UFO right here. Okay, right here, that is enveloping the EMA because the bottom part is 90.10, the top part is 90.23. So that UFO is enveloping the EMA, and therefore it's a valid entry. Okay. Having said that, I am just a bit, not too much, but just a bit uncomfortable with that UFO. And the reason why is because the current price for the Euro Pound, the Euro Pound, it's 89.97. So basically, we are around 10 pips away from the entry. 10 pips away from the entry. well, it should be fine. So 10 pips away from the entry certainly will push the EMA up a little bit. The current value is 20, so it may become 21, 22, maybe 23, and this UFO is 23. So we are fine. Okay, so we are fine to take the trade. I would prefer, though, just to have a bit more wiggle room, okay, if you wish, a better adaptation. I would prefer that this trade is taken after 5 p.m. After 5 p.m. New York time, which is when a new daily candle will begin. Okay, when a new daily candle will begin, and the reason why is because, given the fact that this market is moving down, then the average is moving down, and the current value, which is 90.19, will probably become, let's call it 90.17 or 16 or something like that. And therefore, when price comes up and enters this UFO, we have a greater likelihood that this UFO will envelop very well that EMA. So for now, I would suggest to actually set an alert. Okay, you just put your mouse in here and you right click and add an alert, so you can be alerted when price gets closer, and then be ready to execute. So I'm going to assume that that UFO will envelop the EMA. If it was the next daily candle, I would just go ahead and place the order, because I think it's going to be borderline. Then I would recommend to set a trade alert, and you review the trade when price gets closer. And if it's still good, then you take it, and if it's not, then you don't. Okay. Let me see. Fermon, would you ever set up a weekly time frame on the chart, or that would be too far out? Absolutely, Fermont, but not today, since today in the YouTube channel we are doing short-term trading. So then I would not base it on a weekly time frame. The most I would do, it's a daily, as you can see, and still I think it's stretching it a little bit if you think of intraday trading or short-term trading. Okay. But certainly the same approach that I'm using with the 55-minute time frame combined with the daily time frame, you can do it with larger time frames and expose yourself to larger moves. Okay, so why not? Actually, the way I like to do that, to be honest, is also following the concept which is known as the carry trade. Okay, the carry trade, which is to not only to trade in the longer term the currencies, but also trade in the direction of the swaps. So you get fundamentals on your side as apart from the technicals. And on top of that, you get paid interest rates on leverage while you stay in the trade for that longer term direction. So, I mean, there is training on our website. There is a course called the Forex Carry Trade course. I don't know if you have seen that on our website, but if you're interested, you can take a look, and that may be of your benefit. Okay, but I like to do that because that way, if I end up being stopped out, normally it takes a while, and I lose less than expected because I collected interest rates in the meantime. And if I go to my target, okay, it will take a while as well, because it's larger time frame, so it takes time for price to get to the targets. And again, I make more profits because not only I make profits on the move, I also make profits on the interest rates. So I certainly appreciate that very much. Having said that, I will tell you that interest rates nowadays are very, very low. So you find few opportunities to be able to do that, but it's still nice to exploit those opportunities when they're available. You can also open the door to use currencies that are a bit less liquid to do that, because since you're going to be exploiting longer moves, so suffering a little bit of pain on slippage because of wider spreads, it's okay, because you're going to be riding larger moves, and also some of those exotic currencies, they do have decent differentials between interest rates. It's almost the only ones left nowadays that have an okay interest rate differential. Most of the other currencies are a bit poor when it comes to interest rates differentials. Okay, but anyway, so let me read your question. Let me answer. Let's finish planning the trade and we'll call it a day. So, Fermon, would you ever set up a weekly? We answered that already. Miguel, Jose, what calibration for AutoUFO do you use for trading view? For the Euro 55, I'm getting different UFOs. I use, as you can see here, you can see it on my screen, I use 0618. Okay, so you can see it there. Fermon, you never heard of that? I will check out that course. Yeah, absolutely. By the way, the thing is that I'm not sure I am not sure right now, so I will let me give you a little tip, okay, even though I'm diverting here. Okay, so I'm just getting on into our website, even though you will need to send an email because I don't remember by heart. But if you get into the join section, where I'm sure you know the courses are there. So here's the course I was talking about, the Forex carry trade. Okay, and here are the Forex courses. Okay, so there is a promo running right now where if you enroll in any of those classes, you get the carry trade course for free. That's until the 15th of August, I believe. And you need a specific code for that, which I don't know by heart. So if you're interested in that, I'm just saying. So send an email to support at tradewithufos.com, okay, and ask for that coupon code, and my team will send it to you, and then you can go ahead and if you're interested, you can get that class for free, or get the other one, or vice versa, okay, whatever is more convenient to you guys. Back to the euro pound. Back to the euro pound. You get the same now, Miguel. Wonderful, perfect. Yeah, and by the way, there is a recording on the YouTube channel. Okay, let me divert just a bit more. And so in the YouTube channel, okay, if you look at the sharpening playlists, okay, so there is a video on calibration, okay, right there. Okay, this one is from July, and I believe there is another one from May 11. Okay, if you haven't, and this is 2 hours 24. Okay, so I know I'm a bit demanding right now because I'm about to say go ahead and watch those videos, right? So not everybody got 2 hours of time to watch videos, but again, if you have time or watch it little by little, watch it, because in those videos you will learn more about the calibration settings that could be the most convenient for you. And then if you're curious to understand why I use 0.618, so this is explained there. I mean, it's not a magic number or anything like that, but I do have a set of reasons. So you can certainly go ahead and watch those, okay? Cool. Love it, guys. I really love it when you guys are putting time and effort, and those questions are coming from there. So it makes me really proud, guys. Anyway, so back to the euro pound trade. Okay, so we got a climate, we got a valid UFO for the trade. So let's find a target. Okay, let's find a target. And by the way, it seems that today all the trades that we found are short on the currency markets. So 0.88773. Okay, 88.77.3, which of course is going to be 78, which because it's a buy order is going to have to be 80, right? So 0.8888. Okay, so that's a very lucky number for Chinese, isn't it? So so this is going to be your target. Okay, 0.8888. Sorry, I didn't do that right. 8880, correct? Yes, now I did it right. Okay, still a very lucky number. Anyway, so this will be the location for your target, okay? And the entry would be 0.90104, which of course we're gonna run down, is a sell order, we're run down to 9010. And then for the stop, we're gonna set our stop above 23.6. It's gonna be a buy stop. So we adjust it to 24, then we add 2 because it's a buy stop, so it's 26. And then we add 5 because it's a stop, and it's a decentralized market, so that's 31. Okay, so in other words, we are risking 21 pips to make 130. That's a 6-to-1. Okay, that's a 6-to-1, and we're just gonna go for it. Okay, we're just gonna go for it. We just need to find the location for the safety target. So let me do the math. I'll type it on the screen, and we'll be done for today. Okay, so 9010 minus 21 pips. Okay, that is 89.89. Okay. Fibonacci guys out there, I'm sure you love this number. Okay, 89.89. So what a beautiful trade. Anyway, I'm joking, guys. So stop loss 0.9031. That would be the location for the stop loss. Short entry, that would be 0.9010. Safety target, we said 0.8989. And then the final target, okay, that one will be located at 0.8880. Okay, so this is the trade for today. It's like everything we got today was short, isn't it? nice one with a 6 to 1. Um, Again, that's a bit stretched when you see a 6 to 1. We start entering the territory of less likely to hit because it's a bit far. But again, we are planning this trade out of a daily time frame. So the larger the time frames, normally the climates are more relevant, and you may have a more, let's call it, consistent push in that direction, and we may get there. If not, of course, trade management applies like everything we do, and we could do that. Okay. Cool. Let me see. What else? What else? What else? Very good. Duyan, how are you, my friend? Good to see you with us. How are you? Nice surprise to see us join us. Very nice surprise. Now, you just arrived at the time at which we are concluding the session. So, or maybe you were here and you were quiet. Okay, probably that was the case. Anyway, everyone, hopefully the session was helpful to you today, guys. Let me know if that's the case. I never ask for it. I'm always focusing on the trades and I always get distracted. But today I remembered, guys, if you enjoy what we're doing in the sessions, please give us a thumbs up on the YouTube channel. It's always appreciated. Okay, and we will see you next one. Okay. Thank you so much, Fermon. Yunandi, good to see you as well. Nice to see you all. Very nice. You guys take care, my friends. See you in the next one. Bye bye.